Hello everyone and welcome to the monthly market outlook for October 2017. I'm Frank Ochoa, also known as PivotBoss. You can read more about me here at PivotBoss.com and see some of what we offer. Just really quickly here, if you click on pricing down here, you can see that the offer is still on the line right now. I had many folks that had been emailing me over the weekend saying they still wanted to get in and can they get in? So even as early as 10 minutes ago. So yes, I wanted to keep it open just for you here, just for another day or two, and then I'll be putting it back to what it had been. So if you wanted to take advantage of the offer, basically it is our lowest price, 4 Secrets of a Pivot Boss, my book, which just turned 7 years old last week or in September 15th, I guess 2 weeks ago now. And basically, buying the book at 40 bucks also gets you a free month of our Pivot Boss Premium Trading Room, so you can come in at a very good time of the year, because as we head into October, November, December, you usually see some fantastic moves in the market. So this is a really good time right now to kind of pull back a little bit, look at a higher time frame view of the markets, and see if we can find some opportunities for the rest of the month and heading into month end and into the end of the year. So should be some good opportunities here. So I just wanted to let you know that the deal is still on right here. You can also buy the ebook. So I know some of you really want the something you can hold in your hands. You have a great paperback option right here. Just got some brand new matte finished books, which are just fantastic to hold in your hands. There was a great response to the initial $40 offer, and it led to buying out the entire inventory, which was fantastic. So we got some brand new matte finish books, and those recently started shipping out here. So that's a fantastic book to hold in your hand. The ebook option also, some of you are across the world here and want it right away. Ebook option right there as well. You get it instantaneously in addition to the rest of the offerings in the at the SPB dashboard. So just wanted to talk about that really quickly here. Again, you can go to pivotboss.com and read through some of what we offer. Let's go ahead and get started with some of the analysis here and some ideas. So I wanted to start off with crude oil right now. What you'll see on my chart, for those of you that attended last week's webinar, we had last Wednesday we did the power of pivot-based analysis, and it was kind of a jump start to my book Secrets of a Pivot Boss and some of the the powerful concepts that are in that book. Some of the concepts like wide value areas, narrow value areas, inside value areas, higher and lower value relationships, how we can universally apply these approaches to multiple time frames. All those concepts is really what we're going to be talking about here to begin the month, because we just talked about these here recently. Now we have the brand new month, and we can look for opportunities based off of these relationships. So what I'm talking about is this pivot range right here. These 3 lines, that's the pivot range. And those are the monthly pivot ranges. So this is the new month of October. But along with that pivot range, you also see additional pivots as well. You see that white line, you see this white line, and that white dotted line. That's the previous month's high, that's the previous month's low, and that's the previous month's close. And those 3 inputs are what help create this pivot range. High plus low plus close divided by 3 is this line. This line right here is the high plus the low divided by 2, which is the midpoint. And then this line right here is the difference between these 2 projected higher. That gives you the pivot range. So very important levels. And then you see these gold lines out here. These are range extensions based off the previous range itself. So this range from here to here is 100%. That would be 25% expansion based off that range. 50% expansion, 75 and 100 is down here. Same thing above 25, 50, 75, and 100. Those collection of pivots is what I call the Pivot Boss pivots. Pivot Boss pivots. It's just based off the previous high-low close. You have your pivot range, and then you have your range extensions. Very powerful yet simple form of pivots. And but there's many different forms that you can use this way, right? So some of the things that we're going to focus on today is this relationship here. We have that value as seen through the eyes of the pivot range, and then this month it's higher because we had a big rally the previous month in crude. And you can see already early on we've seen a pullback right into the pivot point for the month and inside the pivot range. We're also seeing price come right into what I call the trigger zone, which is the space between these two moving averages, the fast moving average, the mid moving average, and then you have the slower moving average below. That's the trigger zone. So when you have this type of expansion like we did last month, where we had that tightly coiled price action, remember I talked about right in here is where price just wasn't acting right. It was coiling up, and at some point we were going to get a move. This is what I mentioned September 5th during our last monthly market outlook. I said at some point we're either going to see a move up here or we're going to see a move down here. That's what we're going to see. But it's just hard to project which way we're going to go because you could see this thing giddy up both ways before it finally decides direction. Well, we got the move to the upside. And now we're currently seeing a pullback here after a rejection day, Thursday. And so right now it's kind of difficult here because while Thursday in our trading room we were talking about the opportunity of a retest at 52.30 for a shot at returning price to value, now here we are Monday and we've almost gotten there already without much of a retest to speak of. So this pullback here after this recent squeeze now could still be an opportunity short term for bulls to defend and retest back toward highs. So right now we've reached the upper end of the range. And so short term after this type of pullback, you can see kind of almost an impulse move here almost from that low to that high back. We may begin to see some bulls come in and try at least a retest here, and then that may tell us if there's a lower high, it will tell us that we're perhaps coming back. If price is able to push back through, perhaps we bust out and try the top of the range, which would be 53.76. So right now it's still not the easiest overall. We have a pullback after a recent rejection. In our trading room, we had that as a developing rejection day, and if that was going to play out, we had a pullback opportunity down here, but it's played out way too quickly already after waking up this morning with a stop run day in full effect. So now we've pulled back. Remember, we're in an uptrending market right now where you have cycle lows to cycle highs, cycle lows to cycle highs. So while this thing may pull back overall, we still may see a move to the upper end of the range as a whole. So if you pull out of this thing, let's pull out, let's go this way here. Let's just get some regular pivots on the board here. This is what it looks like on a higher time frame right now. This is the last couple of years. So this is all of 2017. We've basically gone flat. This was most of 2016 and a little bit of the beginning of the year. And then the rest of the time we're in here. So we basically just traded right in this zone. And so really rejection at the edge up here wouldn't be until about 54, 55s. And so last month when I mentioned if we come up here, we likely go to 54, 55. We haven't quite gotten there. We got to 52.89 on that high. This pullback may give us enough juice to get to the upper end of the range. As long as price can remain bid above value basically, and this pullback could be what gets it to the upper edge. So right here we're still inside this range, but for the most part we've been working higher within this range. So this is on an upswing right now to the upper edge still. So again, despite the current pullback that we've seen, which was pretty aggressive here since Thursday's high, we might see another rotation where price pulls back, there's an absorption phase that occurs somewhere in here, wherever it may be, and then boom, it releases itself right to the upper edge up here and goes between 54 and 55. So there might be more strength to come. So what we've been looking for is kind of early weakness to begin the month into the pivot range, and from there looking for signs of strength that would suggest another round of price discovery to the upside and to the upper edge of the range. So that's kind of the idea right now. In the very short term, we've seen weakness here. And anytime you see kind of a bounce, a drop like you have, you tend to see a reaction bounce back up. So we could be looking at a retest back toward 50.90 by tomorrow morning, perhaps as high as where the stops came out, which is about 51. What was that, 51.40, 51.20 in that zone. So we could be looking at a bounce right back up short term into this area by the time we wake up tomorrow morning. But overall, this zone right here could be a great buy for another round of strength toward the upper end of the range. So there's a little look at crude right now. Let's see. Let's take a look at the NQ. Here's the NQ. This one's been extremely bullish overall. And again, we're looking at some of the longer term ideas here, heading into the end of the month and the end of the year. Final quarter of the year. Look at this right here. Very clear trading range from 38.50 to 4,800. Very, very clear action. This is about as beautiful a range as it gets, right? Look at that perfect expanding wedge. It eventually breaks to the upside here. Another range and just full-on expansion. It's been an incredible rally. It has started to slow down here recently. Look at the pace. It was just a torrid pace to begin the year. Boom, boom, boom. There's no way you can keep that pace overall. And basically it was 6 months of sheer strength. And now since then, it's been mostly sideways to up. Another thing we've been noticing in our trading room is basically the behavior where these new highs aren't getting paid as much as they had been, so it's creating lower and lower new highs. So usually you have that trend that looks very, very strong in this manner. And right there could be an opportunity where you're looking to defend pullbacks for continuation overall. That's something to keep in mind right there, because whenever this thing starts to break down and you're getting less and less new highs, perhaps that's a sign where you're going to get a bigger move. So before, you were getting some great new highs, and then all of a sudden now, when you get this new high, it's failing. Then you come up here and take out that new high and it has to fail a little bit and it's pushing back. Doesn't mean that the trend isn't still going on to the upside. It still is. It's just things are starting to slow down. And at some point after enough slowdown, you get a stop run day, and that might focus the opposite end of the range. Down here would be a fantastic buy if that were to happen. I keep mentioning it time and time again. Not to say that we are going to come down here, but to say if we do see that day or that time where we see it, it's a big time buy zone, right? There's certain times where you buy and there's certain times where you really buy. And this is one of those where you really want to be in because it's a great, great value. It's a great zone. It's a great spot in the chart. Up here, not so much. You don't go in as hard up here because we're at all-time highs and we're not seeing any juice. We have to see this thing rotate lower in order for it to try higher. And right now, that's not really inspiring a whole lot of confidence. But the market has never been too far away from an all-time high. It continues to be up here near highs. It will continue to do that, but the pace is slowing down. And so should some pullback occur, it could be 1 day or 2 days and we're right here back to this zone. That would be a short-term buy, right? If for some reason we were to drop even lower and get down to this zone right here, that would be a big-time medium or long-term buy. Any one of those could be great month-end type of buy opportunities, or perhaps even a year-end buy opportunity if it were to come back even deeper. But I'm not anticipating a huge pullback of that magnitude. But right now, something that October usually brings is a tendency for a big pullback to occur in October that can tend to take out the August low. And I've talked about that before. Here's the August low. And it's not that far off from where we currently are. So to take that out scare folks out, and then from here rally into year end, wouldn't be too far a stretch of the imagination. That would be perfect case scenario for many folks looking to buy cheap and sell much higher by the end of the year. So just a couple of things to keep in mind. Right now, it's sitting right here at 6K, and one thing that's very apparent is there's been no juice above that level. That's why it has to keep rotating lower and lower to find buyers to come back into the zone. So at some point, we may need to see a run of this low, perhaps even a retest of these lows, and that would be the opportunity to buy for a retest of highs and perhaps finally reaching that target at 62.64.5, which is the 100% expansion target from this impulse range. So overall, we still have some very, very nice key levels to watch on the charts, and it just takes the patience to wait to see how the market will respond to these levels. And once we do get some tests at those edges, could be very, very nice. All right, let's take a look at gold. Gold's been one that has been very, very bearish. It's been turning on a dime after being extremely bullish. I've mentioned to the folks in our trading room that this commodity, out of any of the other futures markets, has been the most aggressive, amazing trending behavior, all kinds of things that you'd want to put into an instrument. This one's been doing it. I always say that you tend to want to see great structure. You want to see great movement. So when price is moving from point A to point B, it's trending in that direction. It's going. And that's what we've seen. It really goes until it finds an edge, and it goes the other way until it finds an edge and goes and goes and goes. It honored this range very well. It honored our key levels off the impulse move. The FOMC key levels have been tremendous. And value has been very, very reliable because anytime price gets too far away from it, it comes back to it. Too far, it comes back to it. Too far, it comes back to it. And we've seen it time and time again. So this one has behaved incredibly well. But it was a little tough here recently because at this point, there was still an idea that it could turn this way until we went too many days sideways here, and we had, almost a week-long inside day scenario. Thursday was inside Wednesday's range, Wednesday inside Tuesday's, Tuesday's inside of Monday's. And then eventually this thing broke down below 1285 and immediately rejected those levels. And it was that event where we switched our thought in the trading room from this was absorption to now this is bulls about to get their stops run. And we would likely be focused to that blue line. And that blue line being the FOMC key level from September 21st of last year. It went right to it. And it comes back down to it and then goes through it and holds at it. And you can see how important that line's been. But on this downswing right here, this one occurred very quickly. It occurred with a breakaway gap here right away. And the other thing was right here on the first pullback, we were watching for signs that this pullback may be bought yet again for one more go at 1375. But what happened was price came up here and rejected this high first and started to work toward the mid of the previous session's range. That's all it took for us in the room to switch sides and say that is not a good sign, and you likely see a 2-day run of the stops, and it goes boom. Then it forms it again the next day after that, another failed new high, and we knew right there that might be a 2-day run of the stops, boom. Then again, here it is, failed new high, boom, 2-day stops. And you just keep riding that thing until this day, right there. It was a failed new low. And I mentioned, again in the pre-market report and also to the traders in the room, above 1302 turns this thing into an outside buy. And then we're targeting 1317, which is the FOMC key level. Because here was the where that key level was defined that day at 1 o'clock p.m. Central. FOMC statement comes out, the federal interest rate decision comes out, and the market reacts and sells off away from it. and then it failed to push downward and got a failed range expansion to the downside, so it comes back and retests the level. And because it went offered to begin with, it went offered a second time and was a great retest entry zone. All of that happened off of one key pivot. And again, very important level there. But this one has been on fire. It has behaved incredibly well. And even if you don't trade the futures, there's many different ways to trade gold, whether it's the ETF or options or any number of gold-related stocks in the industry group. Just a lot of great ways to engage it. But this one has been a fantastic mover. The current idea right now is that we're coming back to 1253.60. So late last week, I think it was Thursday, I mentioned if price were to bounce into 1300 or as high as 1302, that's the sell for a retest back down toward composite value. So that was our idea as of Thursday. We're still on that idea, but we did not get a bounce that high. Got into the balance of almost 1292s, 1293s, failed new high, and then dropped again. So again, you can see failed new high and a downtrend is just money, 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 money. Failed new highs in a downtrend. Just like failed new lows in an uptrend. This right here was a failed new low. Boom, broke higher. That was a failed new low. Boom, broke higher. Failed new low. Boom. That's what you need to see every time. This one was the one time it didn't work out, but we were pretty quick on it because of the mid. So overall, it's the subtle cues, but the ones that are just very, very powerful. It's the failed new highs in a downtrend. This one continues to exhibit that behavior, so it's in a downtrending move, likely back toward value. This one on a higher time frame basis, so if you squeeze out of it, is very similar to crude oil, where it's gotten toward the edge of the range, which it hadn't been to in a long time. Look at this market. This has been coiling up in this way. That's this year, 17, 16, 15, 14. This is 2013. 2013. Right? And we've been in this range ever since. And we have not been into the 1360s since this time, since actually last summer. Like in 2016. That's a long time ago. So as soon as we got up there, it's been a quick return already to value. Again, this range has been everything right now. And so that's why we have some of these key levels up here. Very, very important key levels that continue to keep us on the right side of things for the most part. We didn't quite get to 1375. We knew that could be the case because each of these lows, or rather these highs, have been lower and lower overall. So gold has been a fantastic mover. I think there's a little bit more downside here. Any bounce could be a great selling opportunity to here, and that's a high probability trade with the potential to see even a little bit more downside. All right, this thing could even come all the way back to 1200. It could even get down here, back to 1180. And there's nothing to say it can't get back. This has been a balanced profile on a longer term basis, and all we've done is kind of form an expanding range here outward from the middle of that profile. So there's nothing to say we can't, eventually do this. So right now I think the flow is down into this area, but that doesn't mean it can't continue lower. I think that's just a high probability trade. Let's take a look at ZN. Here's the 10-year U.S. Treasury note futures. This one, we've been watching it in the room here. This one had been dropping sharply from these highs, very similar to that gold move that we just saw. Look at this key range right here. That's the key range high, that's the key range low. It bounces right back to the middle. That's the midpoint. That's now our key range. So when price gets outside of the key range high and it fails to hold above there, the primary idea is that it returns back to the mid with a shot to retest the low. So it's been right in that path. We haven't quite gotten the low yet. but we're getting close. This 124.25 level, very important. It's also right here at that key range low. This is the previous month's low, which was basically Thursday. And right now it's a little bit of buying, but overall we're not there yet. But we're very close. This one may have another couple of days down, but in this zone here, it is a high probability buy opportunity back to value and the mid of this range. But until it reaches new lows, it can continue to look like it's being bought up and then just continue to go lower. That's why I always say fade new highs, fade new lows. This one didn't turn around here until it took that high out. Took it out here, came back, took it out for real, and then came. Right? It usually needs to come down here and take out these lows. Take it out, fail to go lower, pop back above, and now we're rocking and rolling back to value and perhaps across value to the opposite end. So we have a little bit more time perhaps until this thing starts to show rejection, but we're getting close. Getting very, very close here. And it could lead to a great bounce opportunity right back to value. So this one's going to be one to watch very, very soon. Here's the ES. ES continues to trend higher. There's really nothing a whole lot to say to this one. I did want to bring it up just in case, but for the most part, it just continues to trend up. Where we last had it here, you know, we were getting close. We were in here building out, and then we got this big breakout day, which ran through the FOMC key level of 2473.75 and through our 2480 key level. That was a stop run day. So since that day, I mentioned any pullback into that zone is primarily a buy into 2517 and the next target up, which is 2546. We got close to getting back to 2480. This was as close as we got. That was 2485. So I kept thinking that we might see a little bit more, and instead we didn't. We got that day instead, which ended up being a nice little minor absorption here, and it's kind of broken up. This has been kind of a slow runaway train. It's nothing exciting, but by the end of the day, it's near the highs. You know, it almost has that holiday feel to it where it's just, you know, you can't sell a dull market. It just continues to churn higher. So it's hard to sell this market. It's hard to buy it because it's so high. I just think any rotation, any counter rotation just needs to be an opportunity to buy until proven otherwise. Right now, 2510 is that zone. If this thing were to pull back to 08, 2510 zone, where that LVN is, that's probably another bounce opportunity ahead. You can see Pima's coming up to provide support. So this one is just a very strong bullish trending market. Any counter trend rotation is a buy op until proven otherwise. And right now, this is just, it's again, hard to sell. So look to buy counter trend rotations when they come. And again, requires a little bit of patience. I wanted to talk about some stocks here, and if y'all have any suggestions, I'll gladly take a look. These are some stocks I was flipping through here just after the close here, but this was one that I thought had a really good opportunity here for a buy to return it back to highs and perhaps beyond. This is DLPH, Delphi Automotive. You can see how strong the trend has been so far. Right here, inside the trigger zone. Again, 3 pivot-based EMAs right there, 3 moving averages. This is my 21, that's the 34, and that's the 55. So 21, 34, 55, that's the way I like it. But again, it depends on the intensity of the trend. If it's a super intense trend, then I'll drop it down sometimes. But this is my general purpose. And to pull back right into the trigger zone in a very strong sloping trend, especially after this kind of rubber band trade, that's a very strong opportunity to bounce back up. And at the very least, retest the highs, which means 104s could be ahead. We're right now trading 99.95. So at the very least, there could be an opportunity for a move up. If you're someone that trades options, this could be a good call spread. You can also buy calls and select the right strike. But very, very nice opportunity here for a push right back toward highs. Now, given how this has been a mature trend and you got that one big sweep back, I'd be sure if it gets back to highs to have most of it off the table by then, because at that point you could see a counter swing here right back down as this thing perhaps builds a range at highs. After the recent markup phase, this could be distribution. But if it were to push up, anything in this zone between 104 and 106 could be a great opportunity to take it off. So that looks pretty good. Now, one thing here, since we're going to, all right, I'll take a look at Very. If you look at DLPH here based off of the current month's average, you see that low right there? That green dotted line is the lowest low of this cycle here. And forecasting up average monthly range over the last 10 months gives you an average range target of 105.09. So based on average movement, 105.09 is the target, based off the last 10 months. This is your high probability 75% target. That's 102.95. So again, that goes in line with what I usually go with. If this thing's going to rally, you're looking to retest the high, but know that sometimes it can come just below it or just above it. So that's usually your zone. That's why I've always done that as kind of a target zone. But this also quantifies it for you, average range. So if you were shooting for something like, say, 109 or 110, that's way outside the scope of how far this thing is capable of moving in an average month. But that would mean that it would take multiple months to get there. So just keep that in mind. But this looks like a really good opportunity back to 102.95 to 105.09. Let's look at Very here. So this one, wow, that's an incredible move right there. Oh, Mike, that indicator, the one is that's the PivotBoss ADR targets indicator. ADR method targets. Here it is. PivotBoss ADR method targets. And I set this one to a week. Like, for example, from that high, that's a weekly range. From that low, that's a monthly range. So, yeah, that's it right there. But this is really, really incredible rally here. From 10 to 75 and back. Obviously, it appears you already have your impulse move. Anytime you have one like this, it's very difficult to guess what's going to happen next because it's one of those pump and dump type of ones. An incredible move. I mean, whoever had been accumulating around 10 or lower for months on end and then it explodes. I mean, that's incredible. So from this low right there to that high and then back to the mid, that's probably your key impulse move, or perhaps you can use that to that as a midpoint bounce back up. But other than that, 35 to 75 is probably your new zone to watch. And you may just see development in there. This one's just one of those ones it's hard to judge anything because it's a different set of auction dynamics at work here. But 35 is a clear level to watch, big time. If it were to get back to that level, I would imagine that bulls are going to look to defend, at least on the first few tests. That'll be an interesting one to watch. Here's PKG. Now, notice right here, you have a very, very narrow pivot range. This is something we talked about last Wednesday during our Power of Pivot-based analysis webinar. If you want to rewatch that one, or if you haven't watched it yet, I can point you to where it's at on the dashboard. But right here, very narrow pivot range. That usually suggests expansion or at least an increase in volatility. And so it doesn't always, not always the case, but it can be the case many times. This is an uptrending market, generally speaking. You can see value generally being created at higher and higher prices, so that's bullish. That means that you should be looking to buy counter trend rotations. You can see a very nice LVN right here at about 113.80. That's where bulls have come in to defend right now. And overall, in the trigger zone here, this is a stop run day. This looks like it has a pretty solid opportunity to go much higher here. Again, at least to retest the high, if not continue much beyond where it currently is. So this one's pretty solid opportunity. Again, the one about this one that makes it interesting is that it held on the pullback here, right? Market structure holding. And then, of course, it's in the trigger zone and we have a narrow pivot range. And so that could suggest that we have some sort of explosive potential out of this one, where it could shoot higher. At the very least, to retest 120 highs and perhaps even beyond it. Getting to 50% expansion would be about 124. That seems very doable when you have expansion months to at least get to the 50. So this one has some potential here. Again, it has to hold 113.80. That's the key pivot. That's currently the absorption zone right now. So a re-entry on this one, for example, if this is a good stop run day, any pullback into that zone would be the opportunity to try to ride in, or in being patient for an opportunity down at this area. But this one looks like a pretty good opportunity where it may see some expansion. Not usually like some of the ones we look for, but still has some pretty nice potential here. Here's Ulta. Ulta Beauty here. This one has formed kind of an absorption signature that could lead to a change of bias of the trend. So notice right here how the trend was up. It's a slow, lazy uptrend. Value is higher and higher. And then it breaks it here. Boom, breaks it, closes lower. Now you have an overlapping lower relationship and boom. Then it's a lower value relationship, boom, right? So it was a change of bias. It changed from an upward bias to a downward bias. Well, now you see right here we have a narrow pivot range and it's inside this pivot range. So it's an inside value relationship. That's one of the most explosive relationships. Here it is right here. And you can see the initial burst out of that range when it was ready to go. It can have some pretty powerful implications here. What I like about this one is on this day, gap's way down on earnings. Then it comes back up and comes back to that point and right here where it was and creates support. That's right at an LVN, or creates an LVN off that level. And this right here is where absorption is occurring. That's where bulls are currently defending every rotation. The idea is that at some point they're going to run the upside buy stops of these bears defending here, and you're going to see a move, something like this. And this is a downtrending market, and now we have an inside value. To break this would be to break the trend and rally price back up. So this could be a pretty solid move here. I'd be watching 220 here. Bulls to defend 218 to 220. And above 230 squeezes at least back to 250. So 248 to 250 at the very least on the next leg up. That could be a pretty solid move. Right now we're right in the zone. Keep in mind, any break below that zone, a close below it, violates it. It's done. There's weak hands here, and that would lead to another push downward if that were the case. So it has to hold it. Continuing to hold this area and breaking through 230 would be a phenomenal bounce right back toward 250, 248 to 250. And if you measure this thing out from this low, an average move would be 244.75. So I guess 244.75 would be the average move right back up. So that's a pretty solid little opportunity there to watch with a clean edge. And again, above 230 could be a fairly solid squeeze attempt. We have HCLP. HCLP. This is High Crush Partners. Well, let me show you one that we've been watching in the room first. So APC is Anadarko Petrol. And you can see how this one has been a downtrending market. Boom, boom, boom. Lower value relationships, right? Sell the rip, sell the rip, sell the rip. But last month, in September, we got a break of that relationship in a huge rally. And it closed right here at that white dotted line. The new pivot range is higher for the month. So what we've been looking for this month is we've been looking for a pullback to begin the month right into this zone right here. And what we're looking for is any pullback into that area to be a buying opportunity for a continuation up. Because this could be a major change of bias. Major change of bias. From a downtrending market, this thing squeezes, a pullback offers a buy, and now you're returning price back to 54, perhaps into the gap at 56, maybe back to the key level of the 58. So we've been targeting this. So this is something we've been looking at since we had this signal here. But we've been patient about it and knowing that we had a pullback coming perhaps to start the month of October. So our idea right now is still, we could still pull back some, right? But any pullback into the zone provides a fantastic squeeze opportunity. So that's APC. Now, if you fast forward to the one we were just looking at, which is HCLP, this is a very similar opportunity right here. You got your downtrending market. You got lower value relationships, stair-stepping lower. Look, every time it gets here, you sell it. Every time it gets here, you sell it. It gets here, you sell it. It gets here, you sell it until it fails. It failed here, and that was the stop run day. That was the change of bias, and this thing closes higher. Now you have a higher value relationship. The first time that's happened in months. And usually the first pullback to that area offers an opportunity to squeeze it yet again this month. Notice also, look at the moving averages here, those black squiggly lines. They're coming up to provide support now after a change of bias. That support right there, beautiful, beautiful PIMA pullback, change of bias again. That would point you to these lines right there. So just say from this low, you forecast higher, 100% of average monthly range, that gets you to 1304. 75, which is a high probability target, is 1201. So just call it 12 to 13 from current levels. We're currently trading 995. There may still be a pullback into 920, 918, maybe even as low as 9 evens. That could provide a fantastic buy right back up, at least for a first month. And then that could be the beginning of a multi-move back up, perhaps to value. So this is one where we were looking at APC, we were looking at a major change of bias. This is one that's very similar, and you can see many of these, this is Gulfport Energy. Many of these are looking very, very similar, where they've had significant downtrending. And then right here last month, they change a bias. This thing breaks above, makes it support and drives and closes higher. The first test into the pivot range on a higher value is defended. With PIMAs coming up, that could provide another bounce opportunity. Again, we could see more of a pullback. I'm not saying that's the buy just yet. I was hopeful we'd see a little bit more of a deep pullback first. That could provide a big time bounce. So you're seeing this across many different stocks in the same industry group. Here's Gush. This is the S&P Oil and Gas ETF here, 3X. But I just wanted to show the same effect. Downtrending market. Sell the rips, sell the rips, sell the rips until it fails. Failed here. Higher value relationship. These PIMAs are coming up to provide support after crossing over. This pullback, again, could be a fantastic buy. And basically a pullback, just say more of a pullback into say 20 and a half. You would be looking at something between 30 and 32 as a target. That's a significant move. So again, you have to be careful. I'm not saying, you know, if you haven't used a 3X before or something like that, you have to be careful with what you're trading. Always have to know your product. I'm talking about the general trend right now. There's a lot of different ways to engage this potential opportunity. It all started with us looking at APC, and now you're seeing this type of thing build out in many, many different stocks across that industry group. Here's SSYS. This one, again, very narrow pivot range. Look at that pivot range right there. Very, very narrow. Almost looks like one line. And it's very fitting because look at this price. It just basically coiled up throughout the month. And it basically gave you a close almost right dead smack in the middle of the month. I mean, everything was perfect. And then look at today. It's a breakout. Today's a breakout with a 5.5% gain. And again, this is after a downtrending market here. Then it coils up, and now it's seeing, boom, volatility to the previous high. This could be the beginning of a month-long move back up, perhaps toward 27s. That would be a 100% expansion of the previous month's range. That would also get you back up here toward a gap fill, which is between 27 and 28. So this is an interesting one to watch in that today is day one of expansion. Out of this tight range on a narrow pivot range month. This one showing the strength that it does could be an early indication that this thing is headed higher. So if it is, this is a way to engage right here. After you see a major trend day up, price discovery phase up, and you close in the upper 10 or 15% of the day, the first move usually is a pullback into the body of the range and as low as the midpoint of that range, which is right here, 23.74. It's that dot right there. Any pullback into that zone is an opportunity for bulls to jump in ahead of the next swing move up. So if this is going to be bullish and maintain this breakout, it's going to hold that point on a retest, or maybe even as high as that point. You know, it's going to come back, but it's going to hold. And that's going to be a jumping off point for the next squeeze attempt up. So this could be huge because, again, we could be looking at a gap fill back up toward 28s. And that puts you right back to this point here where it broke down. And again, forming a higher low, it might be coming right back to that point. So this is an opportunity for expansion here. Keep an eye on this one, especially if you can stay above 23.74s. So here's a couple of opportunities here we've been looking at before. Here's Aetna. This is one we had before. This one might have much more strength ahead. We had it long on this day right here. Again, sometimes it's just the simple things. And again, this is literally textbook, straight out of my book Secrets, where I'm looking for a signal here, which is just showing me rejection, a pattern of rejection, some rejection, right? Just give me that signal. And then all I have to do is say, okay, is that signal at or near support? Here was support right there. That was support, and it took it out. And then it closed back above that support level. All it's telling me right there is the market traded down below that support level. But by the end of the day, the market had rejected those levels. It's that clean and easy. If there's rejection at that level, then at the very least, you bounce back to value or back to a midpoint of some impulse move. From this high, we had sold off until we formed that low. When we did that, we brought up a target of 157.49 as the target, the primary target, with a shot to go back to 162. Today we got as high as the 160s, almost 161 there. So it's been a very, very nice move. But the next pullback could still be a buying opportunity for a continuation. I'm upward revising now through the highs. We have an expanding type of range that's developing. And that's what happens in a range like this. it goes right to these highs. So we could be looking at a push through those recent highs and a continuation into the next set of targets above. So right here, that's 164.53. Here's 168. I think the next pullback phase could be a buying opportunity for a squeeze right into that target and as high as those targets up there. So it could be rather significant. So again, this one's one that's continued to work out, and because it has continued to work out, is one that you can continue to add back to or allow to ride even a little bit higher. So this one's been very strong. I also wanted to talk about Facebook. Facebook was one that we had last week on that big sell-off day. It finally broke below these recent lows. And what I usually tell our room is, in an upward trending market, the best ideal spot to buy is upon a failed new low at support. And so it started to run through support. I mentioned that day was the day to let it run its course. But the next day was where we really were going to tell whether this thing was going to bounce, because that's your digestion day. If it's a small digestion day the way it was, then chances are you have an extreme reversal, again, straight out of the book from chapter 2, and you get that rubber band effect where price will snap back to where it came from. So our goal in this case was any pullback was a buying opportunity into 171, which is basically that HVN, which we got. And then I said the final move would take you to 174 to 175, which is basically right into these highs. So that was the kind of the swing idea. But now if you back out into a weekly time frame for a moment, and for those of you in the trading room, we talked about this last week. We talked about it again today. If you look at the Facebook in the current weekly chart, very bullish trending structure, very, very nice bullish trending structure. These are the monthly pivots right here, monthly pivots. So pullbacks are buying opportunities, right? Well, we finally got up here and it's gotten mixed. Look at this day right here. This is actually a week, but this candle is last week's 5 days, all put into one candle as a weekly bar. It has occurred right here near the trigger zone. The trigger zone is maybe a couple ticks below this zone. From here to here, that's the trigger zone. In an upward trending market, in a stacked and sloped environment, that's your ideal area to buy. You know, if you think something back here, ideal area to buy. That's why you see a lot of these opportunities. This one's stuck in this zone for a while and then took off. So no wonder you got that major rejection, because we had not seen price test that zone in this move since we broke out. So that was an incredible buying op right there. And so now you see that midpoint. You see the previous lows 165. We could have some digestion over the next week or two off of this area. And by weeks 3, 4, 5, and 6, we could be squeezing to new highs. So I mentioned in our trading room that by the end of the year here, we could be as high as 190. 190 here. If we can hold 165, we could be looking at a rally toward 190. And that could be significant. So 185 to 190 would be the target zone. And just based off of this previous month's range, a 100% expansion would take you to about 186. So we have plenty of juice there right here. So anyways, looking at this one from a longer term perspective, I think has a pretty good shot to see more strength if it can continue to hold 165. So 165 is the big level. Again, if you bring that down to a lower time frame, going down to a daily chart here and bringing this out, there it is. Very sharp rubber band type of bounce. You can see 165 is going to be this level right here. You can even do, say, 166 and just say, in general, if it were to get as deep as that, that could be a home run long-term buy all the way back up. But so we'll continue to watch this one. Could have much more strength ahead. Here's Tesla. Tesla's been pretty impressive here recently. When we last talked about it, it was kind of in this range, right at the middle. And anytime it's at that zone, I mentioned to our traders all the time, I said, we're about to see a move. It's either going to be back up and back to the mid, or it's going to be down and back to the mid. Because this is a market, where balanced profile type of trading usually occurs. It's going to stick around the middle for the most part, then it's going to get out to the outer edge, reject, and come back to value. Or get out to the outer edge, reject, and come back to value. And again, we knew exactly which level to watch because we had the top of our key range at 387.99. And 387.99 right there provided a perfect opportunity for bulls to reject. From this low when it rallied, that was the target zone in terms of where to look for a target. But we're right back in the middle now. And again, this one right here, it's better to look to defend pullbacks. And there are two areas where bulls are looking to defend. It's this area right here. It's about 333. You can see the bend here. You can see that zone of support. And then there's the opposite end, right? It's anything below 300, 303, and as low as 290. That's still the big area down here, which would be a long-term buy. So right now, short-term, bulls are trying to keep this area bid, 330 for a shot back up. But this isn't the best opportunity. I still think that down here would be incredible for a buy op. Anything below this zone would be a fantastic trap back up. That would give you about a plus 30 to 45 points. So that's usually the much better option. So we're going to continue to watch this one much harder when it's sitting right at the edge. But again, that could be a play downward. If this LVN is taken out, we could be looking at a move right down into that target. So that could be a way to play that with puts as well. All right, and no one else has any other suggestions. I will go ahead and leave it there for the day. Over here, let's look at stocks. I just want to remind folks real quickly again, you still have an opportunity here to go down there and grab the book. And it will also get you into the trading room. Looking forward to seeing you all tomorrow into the room. Here's a look at stocks. I was looking at SMH a little earlier. We talked about SMH in October, and this one has a very similar feel to it where that's the key range right there. We have it tightly coiled. And here, it's the beginning of September, and it's been a straight push up. You can see this thing up here with stacked and slope relationship. Here's the pivots right there in the trigger zone being defended. A nice squeeze. So this one is in uptrending mode. Pullbacks to be defended still. So any pullback into this area could still be a fantastic buy for a continuation. I would use that high to this low and back up. You can even use just this mini one, but either way, that could give a very nice target zone for how high we could go. For example, here's SMH. So here's SMH, the one that we talked about last month, and you can see I used that low to that high back to this mid. That gave us a key range. And we left off about right here, and then we got the breakout, and then boom, this thing went higher and broke up, came right back to the key range high, made it a higher low, and is right here. So we're sitting right at 50%. And this looks very similar to stocks. And so pulling back, just like stocks, could still be a fantastic buy for a move up. I still think this has a shot to reach 98s. That's what we talked about last month, is the potential to see a move to 93.86 and 98. Well, we got the first one finally here on the first day of the month. The next pullback could be a continuation. So that's very similar to the stocks, the same exact analysis. So if you go back this way, so I use this low to that high. And look at that failed low right there, right back up to the mid. here, push through, and now it's dragging. So again, pull back into this zone could drive you right up. So that could be a good spot to watch. All right, everyone. Well, I'm going to go ahead and leave it there for today. Thanks a lot for hanging out for this monthly market outlook for October 2017. All right, everyone. Have a fantastic rest of your night, and I will see you all tomorrow. Take care, folks.